Audio Jungle. Audio Jungle.
Smart steps to increase your wealth by 42%. How would you feel if you could make extra bucks, and that too by working for the same amount of time and for the same employer? Sounds gibberish, or is it actually possible? Since most of the people struggle to make ends meet with their 9 to 5 jobs, they just can't get out of the rat race. Hi guys, welcome to our YouTube channel Omega Finance, where we share with you knowledge and insights from the world of personal finance and investing. Those financially constrained days towards the back end of the month, where you have to peek twice into your wallet before you take a bill out, are just too annoying, right? But in this video, we have compiled a list of some smart steps which will help you increase your wealth, and that too by putting in a minimal amount of effort. So let's dive right into the steps which will help you compound your income by more than 40%, and that too with the same amount of income coming in. Number 1. Get a backup plan. If you are one of those peeps who are always giving anti-insurance, then you might have to give it another thought. And it might be a bitter pill to gobble in, since it would initially seem like a burden, but by the end of the day, it will ensure a safe landing in case your high-altitude flight crashes, which I really hope is not the case. So why is it actually important to prioritize insurance over investments? What happens if you don't even live long enough to actually reap the profits which you made out of those mutual funds? What happens with your family? You don't know your lifespan. Nobody knows it. The main problem over here is that most of the people get themselves entangled in money-back plans, payback plans, annuity plans, and even some plans which guarantee some returns on investments. So you actually don't get that insurance, simply because you made it expensive for yourself by getting yourself indulged in those petty investment plans. You can even get those premium insurance plans starting as low as 200 or 300 Indian rupees per month, and that's insurance worth 25 or even 30 lakhs. Number 2. Prioritize self-investments like gold. One of the most ignored and underestimating ways to generate some serious wealth over the long term is option for sovereign gold bonds. Though they are less likely to be the sole reason to increase your wealth by around 40%, but it can actually protect you from the risk of losses anticipated along with high returns investments than we can. Now the biggest problem people get themselves indulged in is the confusion between digital gold bonds and sovereign gold bonds. To help you all out a bit, sovereign gold bonds are considered superior as compared to holding physical gold, and there are a lot of good reasons for it. Investing in sovereign gold bonds can prove to be a life-changing decision for you guys, especially considering the advantages of sovereign gold bonds as compared to physical gold or digital gold bonds. Now, first of all, the sovereign gold bonds allow you to get a lower price than the traditional physical gold or digital gold bonds online. And do you know what's even better? You are gonna get these bonds at a fixed interest rate. And to cap it all, you don't even have to pay any storage cost for these bonds. It is an absolutely great way to generate some passive income. Furthermore, these bonds are of sovereign importance, meaning that they are issued by the government. And an interesting thing about these bonds is that there is no capital gains tax at maturity or redemption for individual investors. So, if you are looking to accumulate some serious cash over the long term, investing some of your money in these sovereign gold bonds might be the best option for you. Step number 3. Invest in direct mutual funds. People often tend to confuse regular mutual funds with direct mutual funds. In the case of a regular mutual fund, you have to pay a fees to the broker or an agent, whereas with direct mutual funds, you are not involved in such ventures and you can always save some extra money for yourself. Now it's popular opinion that most people tend to incline towards regular mutual funds, and they justify the 1% fee being paid to the brokers and agencies as the price for expert advice and business mentorship. But truth be told, that's completely wrong. That 1% can compound into a big amount once you start compounding these every month. The amount can easily be saved to pay yourself. That can be potential investment in some quality stocks that can change your financial life forever. You just never know. And if you are thinking, how am I gonna select these mutual funds? Then you need to know that there is a big list out there. And if you still don't wanna go for it, then why not go for an index fund? Firstly, you are gonna save the advisor fee. Secondly, you are saving the fee you were supposed to pay to the mutual fund company. That's straight up 2.5% of the return in your bank account. Now the next question may arrive in your heads at this point maybe. How much capital do you need to be allocated to stocks and mutual funds? There is a simple rule which is going to help you allocate capital to stocks, and it may come in handy to select stocks in the long run as well. And when we talk about mutual funds, it is crucial to implement the 50:30:20 rule in your financial plan. One should invest at least 20% of their salary in mutual funds, which can later increase whenever possible. But that doesn't mean you need to have large sums to put some strings. You can start investing in a mutual fund for as low as 5,000 rupees and 500 for a monthly SIP. That is systematic investment plan. Therefore, you do not have to wait to accumulate a large sum in order to start investing. Now we need to talk about probably the most important part of this video, and that is number 4, taking the risk. By now you should be insure, have a few thousand rupees invested into gold and mutual funds. By this time we do not need to worry about the risks anticipated with the stock market. So we need to make sure that our portfolio also includes elements that are likely to yield the big money. So let's just suppose that you know the fundamentals of the stock market, but you lack the experience trading stocks. No need to worry. You will feel much calm to take that leap of faith if you are like, मेरे अच्छे खासे पैसे तो म्यूचुअल फंड्स और गोल्ड में इन्वेस्टेड हैं, तो क्या हुआ अगर स्टॉक से पैसे नहीं बनते तो? दूसरी इन्वेस्टमेंट से अच्छा खासा प्रॉफिट्स ऑलरेडी बन रहा है. एंड दिस इज एग्जैक्टली द माइंडसेट वी वांट यू टू हैव. Invest into low to medium market cap public listed companies having profitable quarters and forget about it until your investment actually starts to yield profits. Easy peasy. Moving on to the 5th step, which is plan your retirement at the right age. It's typical human nature that we always think that we have got our entire life to earn money. But truth be told, life passes through like a wink. We think we have a lot of time on our hands, but that's not true. And if you don't plan for your retirement, then you better start gearing up. Ignorance can lead to some serious circumstances later on. Why not invest in the National Pension Scheme? You can always expect some returns worth 11%, and this money can prove beneficial towards the back end of your life. Make sure you get hold of your retirement plan because the most important asset you have today is the leverage of time. Better sooner than later. But now, we need to address one of the most important questions facing the people struggling in the rat race. With that being said, that was all for today. So what do you guys think about these crucial steps to financial freedom? How are you guys planning your investing journey? Do you want us to make a separate video on money management? Let us know in the comment section below. Till then, make sure you press the like and subscribe buttons so we could see you in the next video. Bye bye.